do have assets and are unhealthy, maybe some type of annuity with the living benefits or the riders that are built into there may be the best thing for you, so that it's not to your expense paying for very expensive insurance just to get those types of benefits.
David, can you explain a little bit about what income riders are and wellness riders, or what there is to know about those?
Yeah, great question. It's a common concern of many clients. Some clients, these are relevant to, others it's not. Generally speaking, an income rider with most companies is something that you're going to pay like 1% to 1.5% to have the ability to activate an income stream for the rest of your life out of your money. However, there are some companies that don't have that fee in there. And especially for somebody that's not ready to turn on an income stream for another 5 or 10 years, if you can mitigate paying that 1% or 1.5% fee for 5 or 10 years before you turn on your money, it's going to increase your growth. But a good company with 0% fee for an income rider, you can turn that on at any point in time after 12 months. Now, a wellness rider with some companies, now it's not exactly doubling with every single company, close to in most cases. What a wellness rider is going to do, if the client wasn't able to perform 2 out of their 6 daily living activities, getting up and out of a chair, showering, bathing, cooking, cleaning, using the toilet, taking their medications, if they couldn't perform 2 of those 6 daily living activities, their money would actually double for up to 5 years. Now, if they're still alive after those 5 years, then their money would go back down to the original amount they had on the income rider. It's not a long-term care replacement, but it's one of the best long-term care supplements on the market for people that actually have a pile of money they want to put into an annuity, because they can get those additional benefits without dipping into their principal.
Okay. And then can you talk a little bit about what a terminal illness rider is?
Yeah, a terminal illness rider is something that's built into most policies. And the percentage in which they'll advance you is going to vary between many companies, so it's not the same percent with every company. But generally speaking, somewhere around 80% of the money. So if the doctor said you got 12 or 24 months to live, depending on the carrier you're with, they would actually advance you 80% of your money up front, no penalties at all for you accessing that money in the event you had a terminal illness.
Okay, awesome. As far as the chronic and critical illness riders, those tend to get mixed up. I feel like terminal, a lot of people can understand that one easily, but can you explain what a chronic and critical illness rider are?
Yeah, great question. So the subtle difference between a terminal illness is there's a timeline on your death in most cases. And again, it varies from company to company, whether it be 12 or 24 months. If they said you only got 12 or 24 months to live, that's the terminal. But if someone has like a chronic illness, perhaps they can't do 2 of those 6 daily living activities. It's a common thing amongst life insurance. Now, if you have a good policy, a good company that has living benefits built into your policy, which if you don't know what these are, consult with your broker, ask them why you don't have them. Is this something I qualify for? We can help people find and actually compare what they have against all companies that we work with to see if they qualify for living benefits. But what a chronic illness is going to do is if they can't do 2 of their 6 daily living activities, it's going to advance them a certain amount of money every month. Now, it depends on their age, how long they've had their policy, how much their policy is in the first place. So you need to look at an illustration based on what you're looking at for your circumstances to get an idea of what it could pay you every month. And a critical illness, well, let's just say it's like a one-time injury or an event where you really get hurt. It's an amount that they'd be willing to advance you out of the death benefit of your policy. So like the new kind of insurance where people are healthy and they're able to qualify for living benefits and get all these additional layers of protection that protect them while they're still alive. Whereas the old kind of insurance doesn't have a lot of those things in there and they wouldn't get anything.
I'm glad you brought that up, because when it comes to the chronic, critical, and terminal illness riders, a lot of folks will think that any of these products they're getting into, maybe they're just going to cover, in the event of a death. That's kind of the purpose of getting it. But what a lot of people don't know with these new terms is that they can get something that's going to protect their paycheck if something were to happen and they can no longer work.
True living benefits, yeah, and it's some form of income replacement and or supplement to what they're making.
Yeah, so if it's heart attack, stroke, anything that is going to debilitate you, in completing 2 or more of those 7 daily living activities, then you're going to be able to, if you can qualify for these policies, you can get into something that's going to advance you that money up front.
Correct.
And accelerate what would have been the death benefit as something to protect your paycheck while you're no longer working.
Correct.
Because work benefits are great, but a lot of folks don't realize if you're not working those 40 hours a week, now it's up to you to figure out what you're going to do, because a lot of those work benefits deplete if you're not working anymore. Or go away completely.
I had a horrible scenario. I had a client that, we were following up with him. He kept rescheduling the appointment. We were talking about a $500,000 term. We were going to protect his whole house with it, but he kept delaying the appointment. He just had a busy work schedule. Didn't have time to meet, because of all the stuff going on in his life. And long story short, he rescheduled with me like 4 times. I still did my due diligence following up. Unfortunately, on the 4th visit, we found out that he had colon cancer.
Oh.
And he wasn't able to qualify for any of these living benefits anymore. And he thought he was totally healthy. So, it was an example of this is something you should look into while you are young, healthy, not taking many medications or hopefully none at all. And if that's definitely the case, you should be looking at what kind of living benefits you qualify for in a policy.
Yeah, absolutely. And it's crazy because a lot of things that people wouldn't expect could disqualify you from things like this. For example, we just had a client of ours who just had the flu, the common cold. And they went in and they were prescribed 2 different types of medications that you could be prescribed if you had a cold. But what that told the underwriters was there could be potential lung issues. It's like something like steroid and an inhaler or something like that.
Right.
And we put in the application, this was just last week, and it came back and said, does this client have emphysema or COPD, which are really, critical lung issues or chronic lung issues. And so you never know, whatever you're being prescribed, it doesn't really matter what you take as far as a prescription, but it can be just what you simply go to the doctor and get prescribed.
And that's a very great point because, these people don't any longer qualify for some kind of living benefits. But one great thing about the annuities and on the retirement side of things for people that are ill but still have a lot of assets, it's not about what you qualify for in a health matter. It's what you qualify for in a financial standpoint. So, if you do have assets and are unhealthy, maybe some type of annuity with the living benefits or the riders that are built into there may be the best thing for you so that it's not to your expense paying for very expensive insurance just to get those types of benefits.
If you like what you're seeing, please subscribe. Click that comment button down below. Drop your comment down there. It helps us tailor content to our audience to helping these families across America. Lastly, do not forget to subscribe to our ongoing newsletter with Stress Less Financial.